You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 5th day of March, 2026. Thanks for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first broadcast is our live training room. That one's reserved for members only and those who are taking their 1-week free trial. If you've not taken your 1-week free trial, when Michael joins us at the top of the hour, he'll walk you through the simple steps to sign up for the trial. We'll get your indicators up and indicating today. Your trial will officially start tomorrow, which I know is a Friday, but not to worry, the weekend won't count against you. In fact, we're going to let your trial run all the way through next Friday afternoon at 5 p.m. Eastern. Now, there's no credit card required for this trial. We want you focused on what's being taught so that at the end of the trial, you can make a well-informed, intelligent decision as to whether or not trading is right for you. Now, when you take the trial, you do gain access to the live training room, which runs from 9:30 to 11:30 a.m. Eastern every trading day. But you also get access to everything we do the other 22 hours of the day. You see, our work week begins Sunday night at 6 p.m. Eastern and runs around the clock until Friday afternoon at 5 p.m. Eastern. And you will have access to everything. Without a credit card, we will treat you exactly like you were already a member, a bona fide passport holder, for 5 consecutive trading days. Again, this is so that you can focus on what's being taught and at the end of your trial make the well-informed, intelligent decision as to whether or not what we do is right for you. When the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break, and then we come back for this broadcast, the noon broadcast, which, unlike the morning broadcast, this one is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What'll happen going forward is every trading day you'll get an email about an hour before the broadcast starts. In the email there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email and it automatically logs you into our platform. The benefit of doing it that way is you immediately have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from your desktop, but you still want to join live. And some days you'll be busy, so you can't join live, but you do want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. That's the Christian Financial Radio Network since 2005. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there's over 2,900 daily episodes archived for your educational and viewing pleasure. And if you're new to our neck of the woods, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Now, obviously, you're not going to watch them all, nor do you need to. But it is a great resource to have at your fingertips because it allows you to see how we've evolved over all these years, day by day by day. youtube.com/CFRN. On the left side of the screen, you'll see our schedule for each afternoon broadcast. Michael will be joining us at the top of the hour, about 1 p.m. Eastern, for a recap of what happened this morning in the live training room. Then a little live trading as time and the markets permit. Right now, we'll dive into our daily devotional, which is where we start the afternoon broadcast each and every day. The topic that we're on right now is God, where are you? Our scripture today is Isaiah 6:8 from the NIV translation. Then I heard the voice of the Lord saying, "Whom shall I send? And who will go for us?" And I said, "Here am I, send me." Have you ever had a moment that changed everything? For Isaiah, it happened in the year King Uzziah died, a time of national uncertainty and mourning. What began as a temple visit became a life-altering encounter with the living God. In Isaiah 6:1 we read, "I saw the Lord high and exalted, seated on a throne." Isaiah witnessed God's overwhelming holiness. Seraphim covering their faces and feet, calling out, "Holy, holy, holy is the Lord Almighty. The whole earth is full of His glory." Isaiah 6:3. The temple shook, smoke filled the sanctuary, and Isaiah was undone. So then we read in Isaiah 6:5, Isaiah crying out, "Woe to me, I am ruined, for I am a man of unclean lips." In God's presence, his first response wasn't pride, but panic, overwhelming awareness of his sinfulness before perfect holiness. God didn't leave him there. A seraph touched his lips with a live coal from the altar. Your guilt is taken away and your sin atoned for. Isaiah 6:7. Then came the moment that would define Isaiah's life. In Isaiah 6:8, whom shall I send, and who will go for us? God wasn't asking because he needed information. He was inviting partnership. This was heaven's recruitment call, and Isaiah responded without hesitation. Here am I, send me. Isaiah's calling stretched far beyond Israel's borders. God declared, "It is too small a thing for you to be my servant, to restore the tribes of Jacob. I will also make you a light for the Gentiles, that my salvation may reach to the ends of the earth." Isaiah 49:6. From the beginning, God's plan was global. Israel's fall and restoration was just the starting point. The ultimate goal was every nation experiencing God's salvation. Isaiah's prophecies painted pictures of a coming Messiah who would bring justice to the nations, open blind eyes, and free prisoners from darkness. He saw Gentiles streaming to Jerusalem, drawn by God's light. His vision transcended ethnic and geographic boundaries, describing salvation flowing like a river to the furthest corners of the earth. Thousands of years later, God is still asking that same question. Whom shall I send? Are you willing to respond like Isaiah, moving from recognition of your unworthiness to availability for God's purposes? His cleansing makes you capable. His calling makes you unstoppable. The same God who gave Isaiah a vision of salvation reaching the ends of the earth is still sending people today. Your "Here I am, send me" could be part of fulfilling that ancient promise. Let's pray. Heavenly Father, our prayer today is that you open our hearts to hear your call, and that you would give us the faith and courage to respond. Here we are, Lord. Send us. Use our lives for your purpose and lead us wherever your will takes us. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen. And happy Thursday. Speaking of Thursday, that means tonight is the members only workshop. So members, please have your questions ready. I'll do our best to get us started as close to 8 p.m. Eastern as possible. If you're unable to attend personally, you can always email in any questions that you have, or send them via Telegram, and we'll answer those at the very beginning of the workshop. And if you've been on the trial and you'd like to be in the members only workshop tonight, email Valerie, support@cfrn.net. We'll get your membership taken care of, and you'll get an invitation to join us for the workshop tonight at 8 p.m. Eastern. So let me give you the numbers from around the world. Starting here in the U.S. with the cash markets, or the indices as they're called. Blood in the streets comes to mind. The Dow down 867 points, 1 3/4%. NASDAQ down 121. S&P 500 down 58, almost 1%. The Russell 2000 down 46 points, over 1 3/4%. That does not bode well. In the commodity basket, crude oil up $4.79, trading $79.45 last. It's a gain of almost 6.5%. Gold down $42.90, trading $5,093.80 last. That's a drop of almost 1%. Silver down 82 cents, trading $82.36 last. That's a drop of 1%. And the Asian markets at the close, after 2 red days back to back, we've got a story of a different color in Asia. At the close, the Nikkei gained 1,032 points, basically 2%. Shanghai gained 26. The Hang Seng gained 71. And in the European markets at the close, FTSE down 153, 1.5%. The DAX down 389, 1.5%. And the CAC down 121, and yes, 1.5%. That's unusual. So we had a green day in Asia. There's a red day for the UK. And so far, it is a big red Radio Thursday here in the US of A. We did have a little high impact news this morning, which was actually good. And so, as I've said many times, this is not your father's market. Once upon a time, good news always sent the market higher, and bad news always sent the market lower. But because we have a Fed official who refuses to lower interest rates a substantial amount, good news turns into bad results. Thank you, Jerome. We're forever in your debt, or forever in debt, thanks to you. History will not remember you well, sir. Okay, let's take a look at the global news. Spin the globe around to Nepal, which will elect its new government today. The first vote since last year's youth-led protests that toppled the government. Many candidates are running as independents, with the lead candidate supporting a new technocratic coalition over established communist and center-left parties. Gen Z is on the ballot. The front runner among young people is 36-year-old Balendra Shah, a millennial rapper and former Kathmandu mayor, I'm not joking, who'll be running against ousted Prime Minister MC Kagda Prasad Sharma Oli. Okay, I was kidding about the MC part on that one. Nearly 160 Gen Z candidates are running across the country, about half as independents. Many joined cause with the National Independent Party, a centrist coalition emphasizing government reform and digital fluency. A top consideration for voters is the economy. Youth unemployment stands at over 20%, and roughly 1/4 of gross domestic product comes from remittances. What are remittances? That's when somebody in your family or your circle of friends goes abroad, maybe to America, the land of plenty, gets a good paying job, and every payday, their first stop is Western Union or Walmart, where they have MoneyGram, and they send those funds. 20% of their gross domestic product is from people in other countries sending their family and friends money to live on. While Gen Z Nepalis protested a social media ban last year, the crackdown left nearly 80 people dead and forced Oli to resign in just 2 days. The protests were part of a wider trend of youth uprisings, including in Madagascar, Bulgaria, Morocco, and Iran. Moving on, the U.S. Senate failed to advance a war powers resolution that was trying to limit President Donald Trump's authority to wage war with Iran, with 53 voting in favor, short of the 60 votes needed. Now, it's interesting, going all the way back to Reagan. When he struck Grenada, was there congressional approval? Nope. When Bill Clinton pulled his shenanigans, was there congressional approval? No. In Trump's first term? Nope. And in Biden's 4-year term from hell, were any of the strikes he made approved by Congress? Again, no. But we're talking about Donald Trump here, so no matter what he wants to do, the left has to fight it. Not because of the policy, not because of the merit, simply because Trump derangement syndrome, TDS, is a very real thing. Women's brains lose nearly 5% of their gray matter on average during pregnancy, according to the largest ever study of pregnancy-related brain changes published yesterday. Researchers say the change, which is partially reversible after 6 months, may be preparing women for motherhood. Brain scans from 127 women before, during, and after pregnancy reveal that most of the gray matter loss occurs in a brain network associated with self-reflection, empathy, and rest. Women who shed more gray matter were likely to report bonding well with their newborns, suggesting an evolutionary adaptation to childbirth. The study's authors hope their findings will contribute to a detailed map of how the brain transitions into motherhood, which could help treat conditions like postpartum depression and improve attachment between infants and caregivers. Another study published last month found that women pregnant with a second child experience unique changes in brain networks tied to paying attention and responding to stimuli, skills useful when caring for multiple children. Remember how mom had eyes in the back of her head? Yeah. Well, we're starting to understand why. Turning to Wall Street. U.S. stocks slid today as Wall Street failed to build on a rebound session yesterday, and for technical reasons, which I showed you yesterday and I'll show you again today as we get to the charts. Obviously, all based on the conflict in the Middle East, or mostly, holding focus amid a renewed surge in oil prices. Focus remains on conflict in the Middle East as attacks between the U.S.-Israel coalition and Iran have spread across the region. Thursday marks the sixth day of violence, with no immediate signs of abatement. Trump said yesterday the U.S. was doing very well on the war front, and we're only 4 days in, while the White House announced that American forces, I guess today makes day 5, while the White House announced that American forces had struck more than 2,000 targets and were moving toward complete and total control of Iranian airspace. Robinhood is releasing a premium rewards credit card. Now get this, it has an annual fee of $695. Robinhood's Platinum credit card is one of several updates Robinhood announced at its Take Flight event yesterday. In addition to enhancements for Robinhood Strategies users, a family investing feature, a new perk for Robinhood Gold members. The Platinum card offers higher limits, elite rewards, and luxury benefits, and raises the bar for what customers should expect from a premium credit card. This comes from Deepak Roy, GM and Vice President of Robinhood Money. The new Robinhood Platinum card is invite only. At launch, the company will send a select number of invites to customers, though you can sign up to request access via Robinhood's sites. With a $695 price tag, the Robinhood Platinum card has among the highest annual fees available for premium reward cards today. In exchange, you'll earn solid rewards and get benefits for select spending each year. Bonus rewards cover a few different categories: 10% cash back on hotels and rental cars, 5% cash back on flights booked through the Robinhood banking app, 5% cash back on dining, and 1% cash back on everything else. You must have a Robinhood financial brokerage account to redeem the cash back you earn with this card. You can redeem your rewards into your brokerage account, use them to purchase travel through Robinhood's travel portal, and pay with select online merchants and more. The Robinhood Platinum card also offers annual benefits for cardholders: complimentary Gold membership on the Robinhood platform, unlimited Priority Pass airport lounge access, $250 in annual DoorDash credit and complimentary Dash Pass membership, $250 annual credit for autonomous rides, complimentary Amazon One medical membership, complimentary Function Health membership, complimentary Aura membership, and a $200 annual credit toward health wearable purchases. Robinhood puts the value of these credits at over $3,000. But remember, annual credits and benefits will only help you save money on purchases that are useful for you and your budget. If you already have these benefits through another card, or you don't use these services at all, you may have a hard time getting the value for the $695 that is the annual fee. And, well, we could talk about credit cards for a while. In a pinch, it's good to have one. Got to rent a car, you got to book a hotel room or a flight. But beyond that, our country is a nation not only deeply in debt from the government perspective, but the man in the street, the nuclear family, the population. It's bad. It's real bad. From Bloomberg, Broadcom's CEO said the company expects its AI chip sales to top $100 billion next year, marking major inroads into territory dominated by NVIDIA. We have line of sight to reach this milestone in 2027, he said during a conference call with analysts yesterday. We have also secured the supply chain required to achieve this. Layoff announcements slid in February. We got econ reports this morning. And there's a new report out from the global outplacement firm, Challenger, Gray, and Christmas. Amid other emerging signs, the labor market may be stabilizing. Employers reveal plans to slash 48,307 roles last month, compared to the 108,435 job cut announcements seen in January. Reductions were posted in fields like technology and transportation. Still, with U.S. involvement in a growing war in Iran, the end of Q1 may bring more layoff plans as companies tighten belts amid uncertainty and higher costs. And from Reuters, Sage, a New York-based senior care technology firm, announced today it has raised $65 million in new funding to expand its artificial intelligence platform designed to help caregivers in nursing homes and assisted living facilities. The Series C round was led by Goldman Sachs Alternatives, with participation from existing investors IVP and Goldcrest. Turning to Capitol Hill, the U.S. military killed an Iranian official who allegedly orchestrated a 2024 plot to assassinate President Donald Trump. Pentagon made that announcement today. Iran tried to kill President Trump, and President Trump got the last laugh. Pete Hegseth made that comment, but would not name the Iranian official killed in the attack. We've known for a long time that Iran had intentions on trying to kill President Trump and or other U.S. officials, Hegseth said, adding that the U.S. attack on Iran was not focused on eliminating those responsible for the alleged plot. And, never forget the millions that came across all of our borders, unchecked and unvetted for 4 years. Many from Iran, many from China, many from nations unfriendly to the U.S. And nobody knows where they are. That's why they call them sleeper cells. Remember the words of bin Laden. Next time, we're going to get you from inside. And last, ICE protests grow as student achievement plunges. Just last week, hundreds of students at Lincoln Park Public High School in Chicago staged a mass anti-ICE walkout, leaving classes without permission to protest federal immigration enforcement policies. And I bet you 50% or more couldn't find Iran on a map if you put a gun to their head, which we won't do. Of course, similar scenes have unfolded all across the country in recent months, often either tacitly or overtly encouraged by public school teachers and teachers' union officials. In Chicago, a teachers' union members recently filmed themselves entering a Target store where they harassed employees on the job, bizarrely demanding that they somehow shield workers from ICE enforcement. Such deliberate ideological activism, encouraged by leftist organizers and echoed by much of the media, effectively grooming students for lawlessness, might be slightly less offensive if actual student performance in the classrooms of Chicago wasn't so dreadful. Even at the protest high school, Lincoln Park, only about half the students are academically proficient. And we're talking about one of the wealthiest city neighborhoods in America. That's right. Only 51% of those students are proficient in math, only 53% proficient in reading, and 42% proficient in science. But they've got time to go out and protest and harass employees at Target. So in a neighborhood of multi-million-dollar brownstones and Tony boutiques, the best the politicized teachers union can achieve is half the kids doing just okay. In fact, Chicago Public Schools actually boasts about Lincoln Park High, branding it as Chicago's top neighborhood school. Boy, that doesn't speak well for the rest of the area. But admittedly, the school's performance is better than the citywide marks of academic misery. Among high school juniors across the Windy City, just 19% are math proficient, and only 22% read at grade level. The systemic level of failure does not come cheaply. In a city struggling with an unsustainable fiscal crisis, Chicago Public Schools cost taxpayers a whopping $10 billion annually, only half of which reaches student instruction. So the per pupil cost tops $30,000. That's per student. So you're paying 30 grand a year so that your kid can't read, can't do simple math. Is there a solution? Well, perhaps if the teachers union focused on student achievement instead of constant activism, results could improve. Is the goal to create mature and capable young adults who can thrive in a new digital economy? Is it vital that America raise up a new generation of patriots who love our country and embrace the responsibilities of citizenship? Well, instead, it seems that school system chiefs in Chicago and across America prefer to indoctrinate students as politically fixated young agitators who can act out with impunity. As long as leftist narratives dominate, those vulnerable children are simply passed along, advancing grades without mastering the basic skills of a fully formed thinker. Doesn't bode well for the future of America, does it? All right, let's go to Logic 247. That is our 24/7 around-the-clock E-mini alert service. It's not just the E-minis, but also crude gold and silver. Currently, we're in week 396. Over the last 396 weeks, we've issued over 21,600 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out just based on simple market structure. Simple process we teach all of our passport holders. Now, if we scroll up, here's how we ended last week, week 395. We issued a total of 52 alerts, 8 never triggered. That gave us 44 actionable alerts, of which 5 or 11% would have been stopped out, again based simply on market structure. And now fast forward to today. Keep in mind, Valerie did the recap this morning at 6:30 a.m. Eastern. She will update it this afternoon, probably just ahead of the members only workshop. Since the markets opened this week, Sunday night at 6 p.m. Eastern, we've issued a total of 47 Logic 247 alerts. Still waiting on the outcome of 12 at the time Valerie did the recap. I will assume some of those have been resolved through the course of today's session. That gave us 35 actionable alerts, of which 2 or 6% would have been stopped out, again based simply on market structure. And this simple process we teach all of our passport holders. Now, every Logic alert has an entry price, long or short, an initial target designed to help you get your goal for the day, in most cases additional targets, and then always a final trade to target. The purpose of the Logic alerts is to help you learn how to read a chart. If you never actually trade a Logic alert, use them for the purpose intended, to learn to read the chart, to know where to anticipate potential resistance, where to anticipate potential support, how to discover the windows of opportunity in between where you'll find the best high probability, low risk trade opportunities. And you'll learn to gracefully accept the fact that your best work, your best analysis, 20% or less of the time, the market's going to do something other than what you expect. So if you're chasing that holy grail where you never get stopped out again, boy, that's going to cost you a whole lot of time and a whole lot of treasure to find out that no such thing could ever exist. So you decide. The logic alerts can come out anytime around the clock, 2 a.m., 2 p.m., futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. Now, 396 weeks, that's a little over 7.5 years. It's a long time. However, quite a few years before we introduced Logic 247, we had our original alert service, the concierge trade alerts. Now, they're different in a lot of different ways. But for the purpose of this discussion, I'll just say this. They don't come out around the clock. They're posted as a static report, typically 5 minutes ahead of the Globex open. The Thursday session that we're in right now began last night at 6 p.m. Eastern. But 5 minutes before the markets opened last night, all of our traders had all of these targets. The S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. So let's go to the charts and see exactly what it looks like. We'll start where we always do, with the bellwether, the S&P 500 Emini futures. As you can see, I did that readjustment yesterday afternoon on the fib extensions. We're now connecting the low of November 21st to the all-time historic high, January 28th, to the low put in 2 days ago, on March 3rd. Okay. It's because we took out this low. That's why I did that. Now we can see that price has traded through the 24% fib extension. Notice today last night when we opened, we poked through the BBC just a bit. We hit that 38% fib extension, and we're now approaching yesterday's low, which is well above the Tuesday low. That's today, Thursday, Wednesday, Tuesday, Sunday night, Monday. Okay. All right. Now, price always reverts to the mean. Doesn't matter what you trade or how you trade it. It's kind of like gravity. It just is. Price always reverts to the mean. In our case, the mean is green. Call it the BBC. Stands for bull bear cross. When price crosses above the green line, we're bullish and expect higher prices. Below the green line, bearish, lower prices, higher prices, lower prices, higher prices. But we've been below the BBC now for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. This is our 12th day. Now, you might be looking at this and go, well, wait a minute, that's above the BBC. It even closed above the BBC. But notice it's still touching. To go from bullish to bearish sentiment, you have to have a candle open and close below the BBC, like this one did. Or on the bullish side, like this one did. See, we closed above the BBC on this day. Then on this day, we opened and closed above the BBC. So then we officially go into bullish mode. But price always reverts to the mean, and you'll notice that the pullback to the BBC holds more often than it doesn't. However, eventually it will trade through. That keeps the markets flexible and tradable. Now, the support we're coming up on, potential support right now. Yesterday's low, 67.73 half. So call it 75 to be cautious. We're currently at 67.89, 67.90. Okay. So that doesn't look like a lot right there, but as we drill down to the smaller charts, which we're about to do, you'll see that there is a significant difference. Okay. Again, might want to jot this down. If you don't have it, if you don't have a daily chart in front of you, yesterday's low, 67.73 half. That should be good support, at least good enough for a bounce. But then price may trade through it because the markets are very heavy today. We also have red and falling overhead. Remember, yesterday we reached up, we touched red and falling, shrank back. Opened last night, reached up to that 38% fib extension, and then, well, the rest is today. We're just slightly off the low. Okay. Now, whether the market's moving up or down, there's always going to be retracements along the way. So, as soon as that wick goes away, give it a minute and you'll see the wick again. Because somebody just said, well, it can't go any lower, and so they buy it. And then it goes lower. Okay. Especially after yesterday's run up. See, most people don't have the benefit of the indicator set that we have. So we're able to truly understand how price flows. And it really helps you to anticipate where the market is going to find potential support and potential resistance. So, all alerts, now both the logic and the concierge trade alerts, are created on the 30-minute chart. Nothing magic about 30 minutes, it's just the time frame I chose many years ago. And they say if it's not broke, leave it alone. So I did. The vertical line separates today, Thursday, from yesterday, Wednesday. The horizontal lines are weekly trading zones, which are published every Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. This was the opening candle last night, and by the 7 o'clock 30-minute candle, we had hit and spiked the long target, which was simply based off right here, where blue turned to red yesterday. Now that candle Can I get a read? I don't know, maybe not. Okay, there we go. Goodness gracious. Okay, we opened, that candle opened at 68.85, ran up to I don't know why it's not popping up like it should. 6,975. So 5 points. That's not right. I don't think it's reading that right. Opened at 85.25. Yeah, oh, okay, I'm sorry. 15 points. But with an open at, oh my goodness. With an open at 85.25, you had a 10-point run up to the target. Anything above that's gravy. 10 points, 1 30-minute candle. Only takes 2 points to get your goal for the day. Now, when the market finds resistance, it's going to go look for support. So we get through the zone, we get through the BBC, and then the retracement, pullback holds, sends us down to the short target. Support sends us to resistance at the BBC, the pullback holds more often than not. Resistance sends us to support at the short target, which sends us back to resistance at the BBC, which sends us back to the short target. And then we continue down to the weekly zone, 41.42. That sends us up to the zone, and this is interesting. Now, this is 4 a.m. Eastern. Okay, London opens at 3. We ran all the way up to the long target to the tick. Okay, see, this is market structure. We ended up closing that 30-minute candle right at the weekly zone. And then, as you can see, we went from the BBC to the zone, back to the BBC, back to the zone, back to the BBC, back to the zone, again and again and again. So we went, first we went zone to zone, then 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 we finally made it through that zone at 41/42, and we've now managed to get below this zone, 6806/07. This week's lowest zone is down at 6688/89. Okay. We still got the rest of the day and tomorrow, and we do have some high impact news tomorrow. On the Dow, here's where we opened last night. And by 7 p.m. Eastern, we had hit the long target, goal for the day. Resistance sends the market looking for support, which it found at the short target. And then we spiked down. I'm sorry, support at the zone, and then we spiked down to the short target. Okay, that short target was simply based off this low right here from yesterday. Support sent us back to resistance at the BBC, which sent us back to support at the short target, and that support sent us all the way back up to the long target, just like the ES. Market structure. Then we consolidate a little bit, and the drop. We hit the short target again, bounce, and then trade through it, make it all the way down to here, right to this area, right here. Okay. We catch a bounce all the way back up to the underside of the short target and red and falling. Resistance has sent us down through the zone, and right here I would have looked for potential support. As you can see, we went sideways, 1, 2, 3 candles. Now price is looking for this low right here, down at roughly 47, we'll just call it 47,700. Okay. All right, we only made it through the Dow. We'll pick up with the Russell when I come back. Michael's going to give us a recap of everything that happened this morning in the live training room and do a little live trading as time and the markets permit. I'll come back. I will finish the recap I was on and wrap things up with our good word for the day.
All right.
Looks good.
All right, and I did update the page, the trade rules page, to reflect the plus 10 and all that stuff, and I put 39 in there.
Oh, that's great.
So I did that.
Sure. Everyone will be very happy to see that.
Good. All right, here we go.
All right.
Good afternoon, everyone. Today is Thursday, the 5th day of March, 2026. Now, if you have not taken free trial with us and you want to, go ahead to mytradingq.com on the purple button. There is no credit card required for this trial. Click on that purple button and it will bring you to this page. On this page, all that we ask for is your name, your email, and your phone number. Down at the bottom gives you TradingView login ID. All right, once you give us that, we'll get the indicators indicating on your desktop. That's all you need to do, right? Now, we had a great day today. I almost don't want to trade because we have 0 stop outs so far. But if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, the 5th day of March 2026, Dad's birthday. We're up 302 ticks on the NQ, 106 on the Russell, 32 on the YM, and 21 on the ES, putting us at $2,462 on the morning session. Had some big trades on the NQ. Oddly, we never had any that like 4 of them, I think, hit for the 50 tick target, but none of them actually gave me 50 ticks. Anyway, this morning we got the goal after 5 minutes in one trade. We're up $1,350 with 10 contracts, or 135 with one. We took 35 trades with 0 stop outs this morning. Put us at 100% of our trades this morning were break even or better. So on the month now, we're at $5,967 over 4 trading days, and we're back over that 1,200 level that I want to get to, averaging $1,491 per day. And on the year, we're now at $50,220 with 1 contract over 41 business days, averaging $1,224 per contract per 2-hour day. Again, back over that 1,200 level that I like so much. The 24/20 blueprint so far this year, if you did everything just like I did for the first part of the trading sessions, would have only had to work 4.45 hours so far, and you'd be on your 3rd contract, and you'd be up $10,207.50, averaging $2,293 per hour. Okay, that is getting the goal for the day. Quit when you get the goal for the day. That is the idea. All right, so we'll start out with the Russell, and I think we have a lot of bars today, so I'm gonna hit the control back thing on this today. I guess we didn't have that many. Huh. All right. Excuse me. So on the Russell, we did have a few big trades today on the Russell too. We started out, our first trade on the Russell was 10 ticks. Then we had a 5-tick trade to get us to 15. Then we went to 21, then to 41. Then we had a big trade here, went to 71. Then went to 75. Then from 75, we had another big trade there, went to 92. And then from 92, we went to 97. And I don't have the other trade. There's one more trade went from 97 to 106. That was it on the Russell. So it was a great trading day on the Russell. During the break here, if I just look really quickly during the break, you see all these ones that went up and hit the overbought, and they came right back out of it, like that one there, dragged out in the overbought. That kept going. But every other one just hit the overbought and dropped right back out of it. If they were coming off the mid-band, those were all successful trades. There's 1, 2, 3, Four of them. This one right here. This would have been our first stop if I had taken it right there. I want to point this out. I said this the other day too. If you get a pullback that changes, and you're in the red. If you get a pullback that changes the top line here, the blue, that means you pulled back beyond the prior swing high. That's showing weakness in the trend. Okay, just want to point that out. When you're in the red, you should be pushing the red down. Okay, not pushing the blue up. When you start pushing the blue up, you're getting close to the end of the trend. All right, YM. Let's see. I guess we don't have that many bars on the YM. Okay, so on the YM, we didn't have that many trades on the YM. We started out here. We had 11 ticks on the first trade. I don't know why I didn't have that many trades. 11 ticks on the first trade, and then we went from 11 to 24, and from 24 to 32. So there's another 8-tick trade in here somewhere that I didn't mark. Did we just not have that many trades on the YM, or did I just miss it? I don't think we had that many. Yeah, we just didn't. It was just a little bit away from it there. That wasn't a trade there because this is where it came out of the overbought. We just didn't have that many trades on the YM this morning. Okay, let's get all the way over here to the end and see if we have one right now. We did just have one right there a second ago. I'm not in it, but my stop would have gone to break even plus 1 at this point. We're actually around the 19 range. We're going to break even plus 4 at this point. The ES, we had not too many trades. Well, we had way more, 3 times more than we had on the YM. But let's go back to the beginning of that. This is the old-fashioned way. Slide it back like this. See where my trades were grouped. Now we did have some break-evens on the ES. We started off with a break-even there. Then our next trade on the ES, we had some 1-tick trades. We had a 1. Then we had another 1 that got us to 2. Then we had another 1 that got us to 3. Then we had a big 4-tick trade there that got us to 7. And then I was saying if we stop out once, it's going to put us to negative numbers. There were some trades through here that were good, successful trades that I didn't get. There's one, there's one, there's one. There's 3 of them right in a row right there. I missed all of those. Well, I got this one. We went from 7 to 11. That was a big trade, 4 ticks. We went from 11 to 13. We had a break even. And we went from 13 to 21. This was our biggest trade right here, 8 ticks. 13 to 21 on that one. That was our last trade in the morning. Let's check it to see if we had another opportunity. That wasn't a trade because that one didn't go full cycle. So it wasn't coming together exactly right and giving us the trades this morning on the Y. I mean on the ES. And it almost had a trade here, not quite. Okay, I don't know if that YM one worked out. YM one that was triggering a minute ago. Well, it didn't actually trigger. This was this one. Was it this one? I think it was this one back here. That did work out. The YM one, the trade back there did work out. This is not a trade right here. That was an ES one back there. Sorry, the YM one was right here. This was the YM. That one did work out. The ES one back here also worked out. That's too low. It's not. I didn't make it out of the. I mean, we was making it into the overbought on this last move here, so that's not a trade right there. Sorry, I'm just trying to keep it all together here. Control and back on this guy. And that is going to bring us all the way back to here. All right. So on the NQ, we had some big trades. The first one here was 27 ticks. That's where we got the goal for the day, right there. That was our first trade. Got the goal for the day on that one from 27 to 37, and 37 to 46, 46, 47. And I'm going to go through these really quickly because we had a bunch of them. 47 to 55, 55 to 65, and 65 to 69. And the next 4 were from 69 to 74. 74 to 116, that was one of our bigger trades. Then 116 to 131. That was a pretty big trade. They went from 131 to 143. Then 143 to 158. Then we had some more big trades in here. From 158 to 204, and 204 to 2. Is that right? 204. 204 looks like to 206 or something like that. Oh no, that's I'm sorry, 204 to 2. That's a bigger number. 204 to 231. Is that right? 241, something like that. I can't read it. I wrote on it. Then went from that number up to 292. And then from 292, we went to 302 on the last trade right there. So that one there was a big one. That was a big one. That was a big one. All at the end. And then that brings us to now. There are probably a ton of trades there. Look at all that movement in here. See, when it breaks away from the mid-band like that, that is a really quick movement. It breaks away from the mid-band. Gaps like that. All this right here. That is really quick movement. So there was a lot of movement during the break. Lots and lots of movement during the break. Now, let's see who's in there. Stephen S. I sent you an individual video about that thing you asked me this morning. Hopefully that worked out for you. I don't have the question box open, so I can't see if you're responding. Jeff. And that's when we get a diagonal midpoint when it's showing weakness. That's when it's when it tells you to stop trading. You know, if it shows the weakness like this right here, it's telling you to stop trading short. Okay, let's do it with a short. Let's look at a short one right here. When it bumps the top up like that, it's telling you to stop considering short trades. And then it flipped the YBR. That was pretty close to the YBR. But if it does it where it's not close to the YBR, like over here, we can go over here, Jeff. It's telling you right here to stop considering short trades for the time being. Okay, it's basically saying right here, let it reset. Where it pumped the blue up right there with the red background and moved the blue up. Instead of having lower highs like that, you had a higher high right there. So when that happens, it's basically saying, okay, you just need to sit back and let it figure out what it's going to do next. You see, from there, it didn't give a valid trade. Didn't give a valid trade anymore. After that, that was the last valid. Last valid trade was right here. Okay, so it's basically telling you I must talk just like a country guy. Fixing on reset. It's getting ready to reset. It is what it's doing right there. Okay. All right. And now we can get back in there and trade again. Okay. I have everything ready to go, so I can place. Trades were green everywhere but the YM. And the high of this is 55, and that is at 31. So the down close is not going to make it. All right. From 55, the down close is going to be at 25, 26. It's not going to hit the mid band. So we're not going to have a short trade there. So our only hope right now is for some long trades. Those are last week's. These are the current week's weekly trading zones right here. And I did not realize during the break that it tanked so bad. Wow. It really tanked. I had put out that thing in that other channel earlier. And those numbers got even better. All those puts. Even better. Gosh, it was a 612. 612, and it's down to 604. Low of the day at 603. Wow. Something. All right, look for the long trade here on the on the NQ and on the ES. Look for the long trade. The NQ and on the ES, we need an up close. Okay, the ES did actually give it just there. Okay, so did the NQ. Okay. So the ES, I got in the ES on the pullback right there. The NQ, I could still get in. I didn't get in the NQ, but I just noticed that they're all there. So I'm going to jump on the NQ right here. Okay. And that just gave me 10 ticks. The ES is about to go to break even, and it just went to break even. Okay, I got 1 tick on the ES. Right now, I think I got 10 ticks on the NQ. Let me go and see what I actually did get. I know it looks like it should have stopped me out, but I entered down here on that. I entered down here on that. Go and see what I got on the NQ. Oh, I totally forgot. These things are reverse order now. All right. I actually did not get any profit on the NQ. I lost 4 ticks on the NQ. It looked like I made some money on it, but I will show you. Here's the NQ. I lost 4 ticks on the NQ and I made 1 tick on the ES. That's odd, but let's put it in. It's in here. So I had already started this in the last session. On the NQ, I got -4. Now that was not a stop out that I got that on. On the ES, I got 1. So it's 2 trades with 0 stops so far. And the number of minutes we have, let's say 14 minutes today. Okay. Now I had started this in the last session already, but let's see. What's next? When you read the action around midnight, do I look at the trigger for any confirmation? The trigger's only got one thing that it's got to do now. It's just got to come out of the overbought or go back into the overbought. That's it. And that's the final thing. No, it's got to come out of the oversold or come out of the overbought. That's what I mean. I'm sorry, I said that backwards. It's either got to come out of the oversold or come out of the overbought to be the trigger, to be able to take the trade. That's the one thing I look at. I don't look to see if it's done all these kind of wiggly things in the middle, because if it's done all that, we're not going to have a trade. Okay, you just have to wait until it actually gets its crap together. And that's what that one that I was looking at over here a few minutes ago, where back in here, where it bumped the top up and it didn't give any more trade setups for a while. That's when all this stuff happens in the middle. It's in between trade setups. It's trying to figure out what's coming next. And right now it's looking like everything's going to keep going down. If you look at the big picture stuff, I haven't looked at the big picture stuff since I've been in this session. We're all the way down at the low of the day right now. We almost have an engulfing candle. We have a new high, higher than yesterday, or almost lower than yesterday. So it'd be a bearish engulfing candle, pretty ugly candle for the rest of the week if we get that. And all that other stuff. These things, all those puts from yesterday, they're just going to get better and better. But remember, they all expire tomorrow. So if you're in any of those still, keep that in mind. I think one of those is going to be over 1,000% overnight. I'll check it in a little while. It's like 760% at the break. And the NQ. Yeah. This is not a trade here on the S. I was looking for the NQ to get up there, but it kind of messed things up right here by coming out of the, actually not making it to the overbought. See, with this leg length down, you would expect it to get here. Now, this 50% is not this leg length. That 50% is from here, I think, right here. If we draw it like this, go from the top down to there, that's where it's doing the 50% from, right there. Okay. As a matter of fact, most of the time, when you draw this like that, from the blue to the red, the 50% is going to be in the middle of it. Do you see that? All right, this down close, I didn't notice this down close right here on the S was actually a short. It's kind of like to get into now. If I would have gotten into that, it was drawn stop over here. If I would have gotten into that, we would have stopped out. That would have been our first stop out of the day. We did lose 4 ticks on that one on the NQ earlier, but it was supposed to be plus 10. And it gave me a minus 4, so it's only 14 ticks. Let's look at the spread on the NQ. I hadn't really noticed it earlier when I took that trade. It's like a 4 or 5 tick spread on the NQ. You can never trade that on a smaller time frame today. I think we're negative right now in this session so far. Right? This session minus 75 bucks. All right, we're about to have another trade here on the NQ. We need a down close. Down close right now on the NQ would be a short. So 10 points from the top of the bar. The bar is now way up there. 55, so we still have 45 on that down close. There it is. Let's see where this thing goes. It's done the 50% retracement. It should give us another leg just like the last one. And it seems like it should have already bumped my stop. Did it not film me? I don't think it filmed me. Crap. I totally missed that trade up. It's the third time today it's messed something up really bad like that on me. I'm in it. And we're going to get the big push down right here. And I'm going to go to break even like that. And I'm out of it to break even because that trade was messed up. I should have been in up here and it put me in like right here for some reason. That's break even. We'll get out of that. We'll break even. I do think it's going to go down though. We'll make our money somewhere else. That makes a little more sense right now. Like the Russell. Here's the Russell. The Russell just went to plus 4. Plus 5 on the Russell. Okay. I don't know what happened with that NQ trade. It entered me way down here. Way late too. Let's put this on in the Russell, plus 5 on the Russell. I didn't put a YM trade on. That was a valid trade there too. Let me just make sure I don't have anything hanging out here anywhere. That might have been okay. I'll set with that. Russell, 5 ticks. RTY, 5. I guess we actually had 4 because I took that NQ trade. I should have gotten way better than the break even on that. I should have gotten like at least 10 ticks. That other one that I got to 10 ticks on, I should have gotten then minus 4 on. Oh well. It's still great trading day. In spite of those 2 things, we have 4.5 minutes left in the session. I think we did just get positive though with that Russell. A little bit. So we just need something else. One more trade to come in here and give us a decent opportunity. We're going down to the swing low right here on the NQ. Just went through the swing low, the most recent swing low on the ES. Went through the most recent swing low here on the YM, and we're just about to go through it on the Russell. So the sky is definitely falling right now. Just gotta be on the right side of that. I believe we are. There's a whole bunch of stuff in Congress right now. I was watching a little bit of Fox News. I almost never watch news, but now that we've got the whole war thing going on, I'm intrigued by what's in real time. There's a whole bunch of stuff in Fox News right now. They're debating whether Trump has the authority to do what's going on in Iran without going through Congress first. Crazy. All right. So on the NQ, any one of these can do it, but I think the ES is going to come out of the overbought, and that's not going to happen. The YM, any one of the other three could do it. Okay, we're in the overbought again here on the NQ. The ES just needs to go up for 2 more bars. The NQ needs to go up for 2 more bars. The YM needs to go up and come down. So the YM and the Russell are actually closest to having a trade right now. I think these two are going to come out of the overbought and disqualify any. They're going to have to reset everything. They come out of the overbought before they get to the mid-band. It's going to come out of the overbought on the down close. Actually, all 3 of them on the down close will come out of the overbought. There's the ES, there's the NQ. So the Russell is the closest one right now. See, now they all need to go down to the oversold and come all the way back up. YM just did it too. So the Russell needs an up close followed by a down close. These all need, but now they need 2 up close. These 2 need 2 up closes followed by a down close, and this one needs a down close, 2 up closes, and then a down close. The S just needs an up close and a down close. Not the S, the Russell just needs an up close and a down close. You guys see that, right? An up close will put you in the overbought above the midband, around the midband, and a down close will take you back down below it, out of the overbought. These 2 need an up close and a down close. We didn't get it on the Russell either. We're not getting it here. And we're just about out of time. Just about out of time. Right now, on the ES, we're back in the overbought, but we're too far away, I think. Russell needs an up close followed by a down close. We're not coming out of the overbought there. That's too far away. That's good. That's nowhere near it. So the Russell is our only hope. It's got a lower swing. You see how the red went down a little bit? To lower swing, we need an up close followed by a down close. Here's the up close. Now we need the down close. Just need the down close on the Russell. And the others don't have anything here. The ES just flipped the YBR up. Thank you. There's the down close on the Russell. There it is. And that actually put me in and took me out already on the Russell. And this, I'll show you. On the Russell. The Russell, here it is. It put me in and took me out.
Michael R. asks, where do you go to see a single trade P&L?
Single trade P&L? The trade orders window. The trade orders window. I don't know if that actually gives you the single trade P&L, but it tells you what your entry and exit is.
And that trade orders, where will Michael R find that?
Yeah, I'll show him. I will show him. Just a minute. When I say that, where I go is, I'll show you. You go into here, go to trade and trade orders window. That's where I go to get it. Okay. It's also on your DOM. If you hook up the what do you call it?
Trade window.
Yeah, the trade attach trade window. Yeah, put the trade window on there. You can see the open P&L and the closed P&L on your DOM also. Okay.
That doesn't break it out by individual trades. That's just your cumulative. It'll show you any trade that you're actually in. And then once you're out of that trade, it'll show you the cumulative amount, positive or negative, that you are in this session.
Yes, that's what it does. All right. Well, that is it. I ran over a little bit. Okay, if you have not taken a free trial with us, go here to mytradingiq.com. What did I end up with? I think I ended up on that last Russell trade, it went to +4, but it didn't give me +4. So this is we're going to end up with $175 on this session. But let me scroll up so I can answer Dwayne's question in a minute. And in here, if you have not taken a free trial with us, go here to mytradingiq.com. Click on the purple button right there. There is no credit card required for the trial. Click on that purple button, and we'll bring you to this registration page. Just fill out the registration page. Okay. And once you do that, then we'll know. Make sure down at the bottom you use your TradingView login ID. Once you do that, we'll know you took the free trial, and we will get you hooked up with the indicators indicating on your desktop and access to the room in the morning. There's a trade setting up here, here. Those two right there are trade setting up right now. All right, with that, I can pass it back out to fabulous Phoenix, Arizona, in Studio Way, overlooking South of America's largest city park. Is ready.
Okay, recap of the morning session.
That's what I said you were going to ask me, and I just moved it away. Today took 5 minutes and one trade to get to $1,350. 135 with one contract, $1,350 with 10.
Good job.
Thank you. Thank you very much.
Okay, guys, we were on the Russell. We already covered the daily in depth. But on the ES, we went from the long target to the short target, back to the long target, back to the short target. We went from zone to zone, back to the zone, back to the zone, back to the zone. Then we made a move that took us finally below that zone to the next zone. Now we're below that zone with one more zone left below. And on the Dow, this is the opening candle last night. We hit the long target by the 7 p.m. 30-minute candle. From there, resistance sent us down to support at the weekly trading zone. We consolidated, as we do 70% of the time when we hit a zone. And then we hit the short target. Support sent us up to resistance, which sent us back down to support, which sent us all the way back up to resistance at the long target. Resistance sent us back down to support. We traded through that support. We caught support here at this zone. Caught a really nice bounce up to the underside of the short target. When you trade through a CTA target and the retracement comes, that underside on a short will often be good resistance. Same is true if you trade through on the long side on the retracement. The top side of the long target often becomes support because it is an important price, important area. And as you can see, the long target was simply based off right here, where blue turned to red yesterday. It's that high, and the short target, it's right there. Okay, that's why it's important you learn to read the chart. So on this move, we traded through the weekly zone. Okay, now this low right here, okay, see this low right here? That is this bullish cross from 2 days ago. When you have a bullish cross, it leads to an extended move. First time price revisits that area. Just so happened it was right at a zone. But as you can see, that's the deal. So it bounced us all the way back to the underside of the short target. And then we come down through the zone. Okay. First time we bounced. Second time we traded through. Now we've gotten down to, now right here, this is an important price, important area. Notice how you've got these candles going sideways right here. Price reached up. We had a green candle that reached up to red and falling, which is bearish. And that sent us back on our way back down. And now our low, as I speak, is the low from 2 days ago. Market structure. Lowest zone for the week with a day left to trade and the rest of today. But notice right here, all the way down, the black step line has been on the left side of red and falling. But look what just happened. The black step line crossed to the right side of red and falling. When that happens, add in the fact that you've got a double bottom here. Okay, price will most likely retrace back to the BBC. Does it happen every single time? No. Does it happen more often than not? Absolutely. The Russell, here's where we opened. Here's where we hit the long target. Resistance, down to support. From support, back up to resistance. Back down to support. Back up to resistance. And again, the long target was just based off where red turned to blue. So after finding support twice at the short target, we bounce all the way up to the long target. But we close, and this is really important. Although we had a green candle all the way up, these are 30-minute candles. At the close of that 30-minute time period, look where we were. The weekly zone, 2633/34. For the next few hours, price tried to bust through that zone and repeatedly failed. Price got below the BBC, blue and climbing, turned to red and falling. This time we hit the zone, or hit the target, and we get a decent bounce. And then we come through it again, consolidated the zone, run all the way up to the BBC. Price always reverts to the mean. In our case, the mean is that green line. I already explained that at the beginning of the broadcast, and I do every day. And so, from resistance, the market now has to go look for support. And where to find it? At the weekly zone. Bounced us all the way back up here. Roughly right where we had that bullish cross. Okay, so from that bounce off the zone, see that wick? See, this was a red candle all the way down. But then we bounced and then closed slightly off the high of the bounce. Then the next candle opened right at the black step line, which is resistance, potential resistance. And what it do, it sent us down through the zone. We sliced through the zone. Now, when price slices through a zone, like a 30-minute zone on a 30-minute chart, when price slices through a zone like it's not even there, like this, what will typically happen when it runs out of steam, it will retrace back to the zone it sliced through and then continue in the direction of the slice, exactly as it did. Now notice these two running parallel all the way down, but notice the black step line starting to hook to the right. If it closes, or if it moves to the right side of red and falling, okay, that's when you look for your retracement. Back up to the zone. If you can get through the zone, this high right here. But basically, when the black step line crosses red and falling, or blue and climbing, you're looking for a retracement to the BBC. Okay. Now, we know that's an important price, important area where the BBC is right now. Okay. And so that may be where price is trying to get to. Now, buyers came in on the Russell ahead of the low that we put in on Tuesday. That's the lowest zone for the week, 2512/13. Remember, the weekly trading zones are published Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. When price rallies up to a zone, we expect resistance till proven otherwise. When price drops to a zone, we expect support until proven otherwise. When price encounters a zone, 70% of the time you get consolidation, 20% of the time rejection, 10% of the time the slice here, and then we pull back up. Okay, and ultimately we continued in the direction of the slice. So as this step line crosses red and falling, look for that retracement back to the BBC. Now there are some obstacles to overcome along the way, namely this zone and the high of that wick right there. Call it 25.94. Okay. On the NQ, here's last night's open, and by the 7 o'clock 30-minute candle, ding ding, we hit the long target and spiked it just a little bit, and the long target was just based off where blue turned to red. Now this candle opened at 171 and ran up, we'll call it $1,200 per contract traded to the target. One candle. Resistance will send the market looking for support. We're doing some wide-ranging consolidation at the zone. Red and falling turns to blue and climbing. We make a run at the long target again here, but right there, we fail to take out that high, which puts us back at the zone. More consolidation. Then we get a leg, then a big retracement that again almost takes us to the long target. Now the high of this candle $205 3/4. $209 3/4. So we took out that high by just a little bit. And when you take out a high by just a little bit or a low, be very cautious. What's the market doing? Looking for support. And where did it find it? Right now at the zone, published Monday morning at 6:15 a.m. Eastern. Once the zones are published, they're carved in stone for the entire week. That's how it's been now for well over 16 years. Crude oil. There's last night's open. And by 9 o'clock, we made it to the long target by the 9 o'clock 30-minute candle. Long target was based off yesterday's high. Plenty of room to get your goal there for the day. Consolidate, and then we pull back holes more often than not. Bounces us into resistance at red and falling. Red and falling takes us down through the BBC and this low right here. See this bullish cross right here? That's when the blue line gets above the green line, leads to an extended move. First time price revisits that area. Almost always good support. And it was. The initial bounce took us here, and then we just continued right back up to that long target where we consolidated for several hours. Now we're setting up pretty close to $81 a barrel. Now early in the week, the analysts were talking about $100 a barrel. Over the weekend they were talking about $100 a barrel. If we scroll back, early in the week, we didn't really see that. This was the gap Sunday night, right here. This was the gap open. It's huge. Right there's Friday's close. And that was the Sunday night open. Supported the zone. And pretty much since then, we've been above the zone, the highest zone. And every time we pull back to it, it becomes support. Now, based on 16 plus years of history, at close of business on Friday, under normal market conditions, price would be at or below the highest weekly zone. This week, due to all of the geopolitical tension and the world's need for crude, we very well may end up closing this week above the highest weekly zone. Will that change anything in the grand scheme of things? No. Will it be the first time it's ever happened? No. Does it happen very often? Not really. But it does happen. Gold. This was the open last night. And by the 6:30 p.m. Eastern candle, we hit the long target. The open of this candle right here was 51.65. Let's call it 66. That's $1,000. That little green candle right there, that's $1,000 per contract traded. Then we continue higher. High of the session was put in where? Right here where blue turned to red. That sent price, that resistance, okay, which you should have been anticipating, sent price back down to the zone where it found support, bounced it back up to the long target resistance, sent it back down to the zone support, back to the long target resistance, and then down we go to the short target. Now we spike the short target all the way down to here. Is that an area where I would have forecast potential support? No, not necessarily. In fact, just no. But that's where buyers came in, and they drove us back up to the zone, published Monday morning. Resistance sent the market looking for support, which it found here. Okay, just below this. Now this is a spot I would have anticipated support, but it traded through it. Buyers drove us back up into red and falling. Resistance. So we come back to this support again. Now we got the black step line crossing red and falling. So look for a retracement now back to the BBC and the underside of the short target. Now, as we know, the pullback to the BBC holds more often than not, but eventually it will trade through. On the next candle, if red and falling turns to blue and climbing, like this, you should definitely see the move back to here, possibly even here. And this is the lowest weekly zone for the week. Zone, the zone, the zone. You get the idea. Last but not least, silver. Here's where we opened last night. And by 8 p.m., the 8 p.m. 30-minute candle, we ran up to the long target. It only takes 2 pennies in silver to get your goal for the day. This candle opened at 84.35 and it ran up 12 pennies at $600 per contract traded. So then we come back to the black step line, which provided support. Sent us up to put in a slightly higher high, but again, slightly. That sends price back down to the BBC. We bounce up into the black step line, and then in one fell swoop, down to the short target, where price ran up, price ran down, but basically closed right at the short target. Support sends us to resistance at the long target. Resistance sends us back to support at the BBC, which sends us back to resistance at the long target, which sent us down to support at the short target. From there, we bounced all the way up to the BBC. The pullback holds more often than not, sending price back down. Right now, the black step line has crossed red and falling. So look for a retracement to the BBC. And if red and falling hooks and turns to blue and climbing, possibly, price trades through the BBC. But keep in mind, you've got potential resistance at 83.69, 83.81, 84.34, 84.57, and then the long target at 84.98. brings us around the world back to the daily chart. Now, at the beginning of the broadcast, we talked about how close we were to yesterday's low. Well, looks like we're a little closer. Now, on the way down, there are retracements, okay? That's why when we put in a new low, the wick goes away, and then all of a sudden you see the wick again. That's the retracement, okay? That's somebody hitting the offer because it can't go any lower. And then it does, okay? So watch this area right here. Now, if we take out yesterday's low, it's very possible that we drop to the 0 line on the fib extensions, which again I mentioned at the beginning of the broadcast. I adjusted them yesterday to embrace this low put in 2 days ago. So we're connecting this low to the all-time historic high, to this most recent retracement low, and if we take out this low here, which as you can see, if you take this day out of the picture, this low and this low are basically the same, okay? But you do have this, so you got to respect this. This takes precedent over that. So look for potential support at yesterday's low. That's where buyers came in and drove a weak day to a pretty strong finish. But the finish yesterday, look what happened. We hit red and falling. We barely touched the daily BBC. On the open last night, we did spike the daily BBC up to the 38% fib extension. And now this is where we are. Okay. To become a member, email Valerie, support@cfrn.net. Let her know you want to become a member. She'll send you all the information you need to get signed up. And then everything we have to offer will be yours. Let's wrap it up with our good word for today. Trust in Christ alone. Paul writes in Ephesians 2:8, by grace you have been saved through faith, and not of yourselves. It is the gift of God. Why did Paul say we are saved through grace alone? Because trying to obtain salvation by keeping the law sets you up for failure. For whoever shall keep the whole law and yet stumble in one point, he is guilty of all. You say, well, that's an impossible standard. You're right. The law is like an X-ray machine. It can reveal what's under the surface and identify the problem, but it can't fix it. The law is also like a mirror. It can tell you that you need to apply makeup or shave or comb your hair, but it can't do these things for you. In other words, the law can show you your problem, but can't solve it. But what the law could not do, Christ did on the cross. Romans 8:3. And in John 19:30, that's when Jesus said, it is finished. All your sins from the cradle to the grave were atoned for. And when you put your trust in Him, you're saved for time and eternity. Some people acknowledge that you are made right with God by grace through putting your trust in Christ. but they believe you maintain your salvation by keeping the works of the law. The problem is with that theology is even on your best day, you cannot live up to all the demands of a perfect God, which led a hymnist to write many years ago, trusting as the moments fly, trusting as the days go by, trusting Him whate'er befall, trusting Jesus, that is all. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.